Hi, everyone. Good morning. I'm Muneeb. I'm the founder of Stacks, and I've been in the Bitcoin space since around 2013. Today, I'm going to walk you guys through a very recent trend, which is around Bitcoin treasuries. And you might think that, why is this interesting? Why should you learn about it? I personally think that Bitcoin treasury companies trading on Wall Street is effectively one of the largest evolution points of Bitcoin that we've seen in the last 10 plus years. And in this presentation, I will sort of take a deeper dive, go into some of the concepts, tell you about what these treasury companies are, how they navigate, and what is sort of like my view of how they're going to change the landscape for Bitcoin and a lot of other digital assets. A little bit about Stacks. Stacks is the largest Bitcoin L2. We started the project in around 2017. Think of it as Bitcoin is very simple and durable. You can't program it. You can't sort of like have an on-chain Bitcoin economy. And Stacks is that missing layer. It provides programmability to Bitcoin. You can deploy it on chain and developers can come and start building applications. And I'll sort of like link why L2s like Stacks are actually very critical for this next evolutionary phase of Bitcoin where it goes up and meets Wall Street. All right. So what's happening? Most of you might be familiar with MicroStrategy or Strategy as it's called now, which is the first Bitcoin treasury company. Michael Saylor pioneered the concept, and the concept is actually very simple. What they're doing is that a publicly traded company is buying Bitcoin and keeping Bitcoin on their balance sheet. What does that do? Basically, there are certain pools of capital that are around the world that don't have access to directly buying Bitcoin. Even with ETFs, you would think that, now BlackRock has an ETF and there are all these products. Even with these ETFs, there are certain pools of capital that don't have an efficient way of actually getting exposure to Bitcoin. They might have certain fiduciary duties or certain sort of like board requirements. And these are late stage, large pools of capital that have very, very different risk profiles. So the genius of Michael Saylor was that he gave them a investment vehicle, which is just a public company stock that they're familiar with, that gives them the exposure to the underlying Bitcoin. And to put things in perspective, MicroStrategy went from something like a $500 million company to almost like a $100 billion company over the past 4 or 5 years. So it's been extremely successful. MicroStrategy has been the best performing stock, even more than Tesla, for some of the previous years as well. So what these public companies do is that the Bitcoin that is actually managed by the company is sort of like it can be optimized. It's at the discretion of the company what they do with their Bitcoin and what sort of investment vehicles they're using. Sometimes they would use convertible debt to raise more capital, or they would issue preferred stock to be able to go and raise more capital and then just go and buy more Bitcoin. So at a high level, what's happening is that the best store of value that humans ever created, like the hardest money Bitcoin, met the most efficient capital market, which is NASDAQ and NYSE. And interesting thing starts happening here. Because before this, Bitcoin was sort of like sitting in this relatively disconnected market from mainstream, right? Yes, the crypto markets might be very large, but they're still relatively disconnected from the NASDAQ and New York Stock Exchange. These are the most efficient markets ever created in the history of humanity. So that's where things start becoming interesting. So that's not the first or the last company that's there to hold Bitcoin. Saylor sort of like pioneered the concept, and then other people started catching on to that as well. There are many other companies like MetaPlanet. There is Nakamoto, Anthony Pompliano. He just announced a company as well. So it started like an entire wave of these new companies that are coming out. They're raising capital and they're trying to buy Bitcoin and other digital assets. The way this sort of works is that the market is willing to give some sort of a premium to the companies or the management's ability to go and raise more capital, right? So MicroStrategy, it trades at around 1.6 premium. basically means that people have confidence in Michael Saylor's ability to be able to go and buy more Bitcoin. And the metric that they're trying to optimize for is Bitcoin per share. So if you hold MicroStrategy stock and you want to sort of see like how well is this stock performing, the metric that you would look at is my holding of Bitcoin underlying my stock is actually going up over time or not, right? And then people started applying the same concept to other assets very quickly to Ethereum, which naturally makes sense. It's the second largest asset out there. And then recently to other crypto projects like Solana and others as well. I don't know if you guys have been following the rise of Tom Lee's BNMR, but that has actually bought up something like $10 billion in ETH over the last 4 or 5 months. Right? So this concept is actually extremely relevant. It's happening right in front of our eyes, where these digital assets are now meeting NASDAQ and the public markets are getting exposure to these underlying things. So why me as a Bitcoiner interested in this market? Why am I studying this? Why am I looking into what are the dynamics that are emerging here? Let me give you a little bit of a backstory. So basically, in Bitcoin, there have always been these two schools of thoughts. One is the original sort of like Satoshi era, where people believe that Bitcoin is going to be productive. There's going to be a circular Bitcoin economy. People are actually going to use Bitcoin, and there are going to develop a lot of applications and use cases around Bitcoin. And then there's the more era that became later, which is more about just holding Bitcoin. That I'm just going to hold Bitcoin, and it is a passive store of value for me. I think there's value in the passive store of value, but frankly, I came into Bitcoin for the first use case. What excites me is actually using Bitcoin, building around Bitcoin, deploying it on chain, having a circular economy of Bitcoin that actually goes to billions of people around the world and changes the way that financial systems world around the world. And I've sort of like watched this trend where if you look at Ethereum, if you look at Solana, if you go to ETH Denver, or if you go to Solana Breakpoint, over there you'll see this energy of developers who are actually coming in and they're building stuff with Ethereum. They're coming in and they're building things with Solana, right? They're deploying these applications, and they're this massive, almost like a wave of developers. And it's very enthusiastic. It's very future forward that they are coming in, they're experimenting, and they're doing all these amazing things with this chain. Bitcoin is a little bit different. Yes, it's more simple. It's harder to program, but there are these L2s like Stacks, Babylon, Lightning, and a bunch of others that do provide some level of programmability to Bitcoin. But that community has relatively been somewhat smaller compared to the other blockchains. But what's happening now is that because of these public markets, now there is public pressure on these treasury companies to make Bitcoin productive, because the market is now demanding these treasury companies to be able to generate yield. I'll give you an example. Recently, Kyle Samani, who's one of the early investors in Solana, they launched Forward Technologies, and Cosmo from Pantera Capital and Joe from Summer Capital, they launched a Solana company as well. And the message that they're giving to the market is that, yes, Bitcoin is great, it's a great store of value, but it doesn't have any yield. If you look at Ethereum has around 3% or so yield. Out of that, around 0.4% is real economic value, and the rest is inflation. If you look at Solana has around 1.8% real economic value, so already higher than Ethereum, and the rest is inflation. But these are yielding assets where the public treasury companies, if they just hold this asset, they can actually earn a yield on a weekly, monthly, quarterly basis. And that changes the game. What that does is that these companies and these assets are viewed differently by Wall Street investors. And those people are extremely efficient. Like imagine hedge funds on Wall Street, they would actually optimize any like small area of optimization that is there to take a profit, right? That's now putting a ton of pressure on Bitcoin treasury companies, and it's a little bit of a come to Jesus moment for Bitcoin holders, right? Like before, you could be a Bitcoin holder and sort of like ignore whatever is happening in the rest of crypto. But if you are a Bitcoin treasury company holding around 500 million or $1 billion of Bitcoin assets, and the market is now trading you at below NAV, so NAV is your net asset value, and the market is actually trading you at below NAV, that means that you almost become an acquisition target. A Kyle Samani can come in and acquire a Bitcoin company, dump the underlying assets for Solana. That's very real competition that's actually now emerging in the public markets, where these people would now have to figure out how to get yield on Bitcoin, what these L2s are, how does on-chain Bitcoin economy work, and we are seeing a ton of that interest come to Stacks. So what exactly is Stacks? Stacks is a Bitcoin L2. It's a unique asset where just like you can lock Solana in a validator and start earning the yield, which is in Sol. But on Stacks, you can lock Stacks and the yield is actually in BTC. So it's a Bitcoin yielding asset that opens up the world to Bitcoin on-chain deployment. And a lot of these treasury companies are now coming to Stacks because they see that as a way for how they can compete in the market and sort of be more competitive against other treasury companies that are out there. This actually reminds me a little bit of Barbarians at the Gate. I don't know how many people have read the book, but there was this time in Wall Street. In some ways, it was a very exciting time in the late 80s and early 90s when a lot of these private equity firms figured out how to go in and do buyouts of large companies. And it was a very sort of like brutal and ruthless time as well, but it led to a lot of market efficiency. And I think that because of Bitcoin treasury companies, our industry is about to enter a similar stage. It's going to be Barbarians at the Gate again, that if you don't know how to manage your balance sheet with BTC on it, there will be a Kyle Samani or a Tom Lee standing outside willing to take over your company and then basically taking the underlying assets and using them for their own advantage. And I think in some ways, I'm a believer in open markets. I'm a believer in free markets. I think that type of competition and that type of pressure coming to Bitcoin is actually a good thing, because in the end, that is going to accelerate all of the advancements and technical advancements that we were having for a very, very long time. And it's sort of like a come to Jesus moment where Bitcoin developer community and the Bitcoin L2s will have to sort of like rise to the occasion and be able to provide the kind of services that people are seeing in some of the other networks. So I think it's a Bitcoin meeting Wall Street, which is going to have a large impact on how the developer ecosystem and the yielding opportunities and the on-chain economy around Bitcoin is actually going to function. So what role do we see our project Stacks playing in it? I mentioned that it is a Bitcoin yielding asset. Over the last couple of years, around 4,000 BTC has gone out as yield on chain for people who have been participating in this economy. And now we are seeing a lot of these large treasury companies that are approaching us. They're like, okay, we have a ton of Bitcoin on our balance sheet. How can we actually deploy it and try to make it useful? And I think not just Stacks, but other Bitcoin L2s are going to have this moment where suddenly billions of dollars of new Bitcoin is actually going to start moving and getting deployed on some of these systems. So some of the things that I'm personally extremely excited about for Stacks is that right now, the way you move your Bitcoin from L1 to L2, there's still some level of trust. There's a decentralized group of signers that's in the middle. But there's very exciting R&D happening where we can make this fully self-custodial. So fully self-custodial Bitcoin on L2 basically means that just like you can have Bitcoin in your cold storage, you can have Bitcoin in your cold storage on the L2, and there's no trust assumption in the middle. We got around $600 million of BTC deployed on the existing system, and we think that this number would be in billions of dollars as we get the self-custodial Bitcoin out, and as more of these digital asset treasuries actually come in and become mega customers for some of the work that we are doing. With that, if you want to learn more about Stacks, you can go to stacks.co. If you want to learn more about Bitcoin treasury companies and what I think is about to happen in the market, you can follow me on Twitter @Muneeb. Thank you so much.